Okay, folks, welcome to Sunday Night Futures Live. And we have a lot of news that has come out, some quiet, subvertly after the bell on Friday, and some overtly today from the president. We'll talk about all of those right now. So let's begin with the futures action. We're seeing a pop on the E-minis. We are up 0.58% and gaining. The question is this: do we fade? Right now, it's looking pretty good. Let's set up an alert. Let's take a look at the NASDAQ. The NASDAQ opening up 0.78%. Again, we're going to be looking for the question to get answered probably within the first 15 minutes of trade. Do we fade? Now, technically, let's assume there was no news that was announced. The market was poised to move up higher. You had that bullish reversal day on Friday, but just keep in mind that the week was fairly bearish for the Qs, of which we are short, and what you're looking at right now, the futures version anyway. Small caps also up 0.72%. So the news that came out on Friday was equity bearish, but not a lot of people paid attention to it. We did. I wrote an article. I put it in the members forum. I think it was this morning I did, or yesterday, one of the two. And I was concerned about the impact of the Barron's article. Again, we'll talk about it in a moment on the market. And I want to check in now. You're going to see a break of this 5-minute bar. No big deal. I mean, we're not day traders here, but I think they're going to break the support level. If they do, I only have a small position in the small caps. I really don't care what they do here. If they do break, they're going to come down and try to fill this gap. Bulls will come in and try to rally it again. The question is, do they win? Do they lose? Now, what we're looking at to see whether or not the bulls are going to be in control are only a couple of charts. One, 10-year yield. It is rallying as well. So what does that imply? Inflationary concerns. Two, the dollar rallying slightly, not much. But gaining. Let's check in with the VIX. VIX is down, no great shock with equities up. Gold. Gold up. Silver up. I want to check in with, I'm trying to formulate an opinion on this open here. So bear with me as I try to absorb this. 2-year note. Wow, 2-year note dropping. We have, looks as though yield curve steepening here dramatically. Let's go back to the 10-year. Yeah. Longer term yields are moving up higher relative to short term yields moving lower. That's a steepening of the yield curve. Some say it's normalization. Okay, and that's fair. But all too often in the past, when we have yield curve steepening with equities at these lofty levels, it usually means some sort of a sell-off. We began to see that last week with the yield curve moving up slightly on the month so far. We have a bullish reversal bar. We'll keep an eye on it. You don't want to do anything right now. You want to wait until tomorrow. If we close equity strong the first hour or so, that's probably going to be an indication that we're going to open positive tomorrow. The problem is that if you see the dollar continue to rally, long-term yields continue to rally, along with gold rallying, that means that there are inflationary concerns. I want to check in with energy prices. Energy moving up. Natural gas. Nice move up higher here for natural gas, up 3.36%. We made some money here last week. I didn't carry the trade. Do I regret it? No, we made money and we did what we thought right. We preserved capital, preserved our profits, and we moved into other areas. Let's say hello to folks. Let's let everything settle down here. Hopefully my audio is working. Good. TF Hatter. AI algo-driven influential news article should start dropping now. The futures are open. Okay. George, good evening. Lee Cable. Cracks are appearing in most assets now. Think the everything bubble will burst soon. Fingers crossed. News articles, I can't type. Okay. Mr. Pete, back on his own computer. Miser, hey, brother. TZ Burton, welcome. TF, welcome. Paul, good evening to you. All right, so one of our members, Sean, is going to be in town. I'll be chilling with him sometime this week. We'll coordinate. So, Sean, if you're on, look forward to seeing you. And let's get to the remainder of the futures action. I want to check back in with equities for a moment. All right, so we have ES. Good. ES is broke. And this really means nothing. We're talking about a 5-minute candlestick, right? So this is not hyperbolic, run for this fire escape. I mean, it's just a fade. And it's not unusual whatsoever. But with the yield curve steepening, suspect of this rally, even though the technicals tell us that we should expect a follow through, because again, we're going to talk about a Barron's article that was released after the close on Friday. Not much reaction, not much attention. And then oddly enough, we come out with a big news event today that is spiking equities because it means potential more liquidity injection by the federal government. But it's a big maybe at this point. Yet equities are moving up higher, and gold, the dollar are all telling you, hey, listen, this is the bond market saying this is inflationary. This is not good. But the equity markets do not care yet. Yet. Okay, let's go back to the NQ, see what it's doing. This is the futures version of the triple Qs. Holding gains, pretty respectable. A balanced amount of trade here. Not a lot of bulls, not a lot of bears. So they're holding. Let's take a look at live cattle. A lot of news over the weekend by the president uh, charging the Justice Department with, I'm surprised, this is a very small move here, with investigating the meat packers and potential price manipulation. So we've shorted the live cattle markets a couple of times. We've done well. Didn't do it last week, but I think that this is going to begin to gain momentum to the downside because it's clear that the president has a target on the back of the meat packers and is friendly to the ranchers, allowing for herds to grow, better pricing on their product because they're now using independent processing plants rather than the Tyson Foods or all these other. There's only like 4 companies out there, and they have a grip on the U.S. meat market that very hard to break. They're trying, and the president's helping. So bravo to him. Let's check in with agriculture, ZW, wheat. Wheat had a great week 2 weeks ago. It had follow through. I remember being bullish on it last week, and technically I was accurate. The problem is we had a bearish reversal week. I still think this is interesting because this is probably going to be a check back, a retest of support. And if we are able to move up and through 530, let's call it 535 the bushel, then wheat can move up higher. Right now it's down fractionally. Let's check in with corn. Corn, similar price action. Soybeans, good news out of China 2 weeks ago. I should say a week ago. And that is allowing for soybean prices to continue up higher. So of the 3, soybeans are clearly the winner here in the agriculture space. And I think to the short side, you need to be looking at shorting live cattle. I think there's a lot of money to be made there. Let's check back. What did I miss? Oh, crypto. Let's go to XRP. XRP is up. Let's go to a 4-hour bar. See, how, looking okay. We need this pivot point here to get broken before we add more to this trade. I'm bullish on XRP. I understand it somewhat. There's a use case for it that I could relate to. Bitcoin, it's a Pimp Mac Daddy. It's a leadership name. I don't understand what they're going to use it for, but a lot of money flowing into it. So therefore, I'll follow the money. Every other token out there, I have no idea. I'm no expert on crypto, so please don't ask me questions about other cryptocurrencies. BTC, up 1.22% at the open. All right. So let's talk about what I've been inferring to. One is that this is really not a big deal to me. It doesn't really impact uh, the vast majority of taxpayers, but it can, air travel, air traffic controllers, national park systems. But it appears as though we're close to a deal in Washington with opening up the government. Just goes to show you. Big yawner. I never really felt the pressure of them being closed. I respect the fact you have people out there that work for the government. Maybe weren't getting a paycheck. I understand that. But by and large, let's face it, you don't need this much government. It's ridiculous. So hopefully the cuts come fast, hopefully through attrition, retirement, they don't backfill. Now, over the weekend on Friday, and this is a classic case of, and I warn about this, I try to remember every Friday when I talk to members and I say, folks, be very, very careful of a news dump after hours on a Friday. That's when they love to dump a load onto the markets. The markets can't react. Maybe the futures of markets can, but by Sunday night when the futures markets open back up, what do you get? Well, look at the time, 6:01. The futures markets were closed on Friday. So by Sunday night, they'll have already massaged the futures in advance of them opening. So what am I referring to? This was released on the 7th after the close, 6:01 p.m. Eastern Standard Time. Red flags hedge funds borrowing, Fed flags hedge fund borrowing as a vulnerability in financial system. This is not some zero hedge article. This is Barron's. This is a placed article. This is meant to be seen. And if you're posted in from the Fed in Barron's, you better pay attention to it because this is not good. It's liquidity concerns that are continuing to rear their head. We've been watching this. We've been talking about it. And after the close on Friday, they did it. They dumped a load on the market. Futures markets were closed. No reaction. Then you fast forward to today. Oh, look at this. Trump announces $2,000 tariff dividend to be paid to most Americans. Sorry, folks, I'm coming down with a cold and my throat's going. So if I pause, I apologize. So what does this mean? It means liquidity. Great. We don't have to worry about the Barron's article anymore. They're going to dump $2,000 per taxpayer, whoever's going to get the money, and they'll put that in the stock market. Let's drive stocks up higher. So this is why we opened up the futures tonight, not with just looking, oh, what's up, what's down. No, we wanted to see tells. What were equities doing? Well, we got this announcement. We expected a spike. The technicals on Friday told us in all probability we're going to get a bump this week. But what is threatening the rally in equities is concerns about the Federal Reserve's ability to cut rates. If you're going to dump, I don't know how this is going to work out. Let's say, I don't know, $100, $200 billion into the economy at a minimum. What is you're going to cut rates? That's inflationary. What this would do is take gasoline and put it on the inflation fire. So that's why we looked at gold, we looked at silver, we looked at oil, we looked at natural gas, all of which were up. Also, we looked at bond yields. The rally in the long-term bond and the decline in the short-term bond tells us that the yield curve is steepening. That is not bullish. So while equity traders may have a knee-jerk reaction that this is very, very good news, in reality, it's a cloak for the Friday news that came out. This has to get run through Congress. This is not going to happen next week. It may never happen. It may happen on a scale so small, it makes no difference. What is real is this. This is reality. This is happening. The overnight borrowing rate from the Federal Reserve to the banking system, it's called SOFR, SOFR, is dropping like a rock. I believe I have a chart of it. We'll go over it in a moment. That's a problem in the system. The plumbing of the markets are under pressure. This is all nonsense. Don't get me wrong. I love Donnie, right? But let's face it, he's doing his job. Let's paper over the risk that came out on Friday. 70% probability that this is covering this. That is the market. That is the game. So we need to understand how the game is played to succeed. Let's go to comments. Mr. Pat, welcome. Yeah, I mean, if we close the first hour up, we don't see a fade, and I'm not hearing alerts with the exception of the S&P coming back a little bit, then it should be a good day. I mean, technically, absent all of this news, we should have been up anyway. It was a bullish reversal bar on the Qs, on the S&P 500, I believe on the Dow as well. Yeah, we should expect some buying. The question is, at this point, do we take out all-time highs or do we put in a lower high and then break down? That's the question. So we'll see. Okay, let's move on. Let's talk about the Fed Watch tool. Earlier, this was at 66.5% probability of a Fed rate cut in December. Let's do a refresh. If this goes down, that's bearish. That's a concern about inflation. They are listening, meaning the guys who populate this poll, they're listening to this, not this. So let's see what they're doing. It's up slightly, flat. Let's call it flat. So not much action there. Shiller PE ratio closed out the week last week, 39.67. And by the way, if you folks are not in our current member forum, this is going away. The new site will be coming out. It's going to be cool. So sign up here and we'll get you a way to enter a symbol of the week and keep you engaged. You won't have access to the chat area here, the Bull and Bear Banter chat area, or the public notifications I put out. I just did that as a courtesy because the old website just wasn't functioning properly, and I use this as a stopgap. And we'll continue to do it, but we're anticipating a launch, ideally by December 1. You never know. So there's a link below to our all the support levels that we have for the triple Qs, of which we are short. If you'd like that infographic, it's free, and you'll also get notified of when the new site goes live, and we'll invite you in, okay? So with that, let's continue on. Buffett indicator. Strongly overvalued. This is pretty much unchanged from last week. We are ridiculously extended here, unsustainably extended, but it's seasonally favorable period of time, November, December. So, we could tread water. We could move up higher. One other way to look at this is that we saw a lot of strength in the equity markets in seasonally volatile October and September. Did they pull demand for equities forward, thus diluting the usual Santa Claus rally that we get? Food for thought. All right, so we have an abbreviated week this week. We have the Veterans Day holiday on Tuesday. God bless our veterans. We have Monday. We have no news scheduled. Oddly enough, on Tuesday, the NFIB Optimism Index will be released. Surprised? It's a government holiday. Surprised. Lots of Fed heads coming out this week. We get inflation data coming out on Thursday. Powell, during his last press conference during the Fed rate cut, spoke a bit about CPI, which he doesn't ordinarily do, but it's a important number. But I think what he was referring to, that he looks at the CPI in conjunction with PPI. So CPI, Consumer Price Index, PPI, Producer Price Index. Are we seeing inflation at both levels, or are producers eating it, not passing along? Right, those questions need to get asked, and I don't think we get PPI this week. Maybe we do. Oh, we do. We do. We get it on Friday. So lots of inflation data coming out this week. And in terms of earnings, not a lot. This is more of a segue into mid-cap, small-cap names. These are mostly mid-cap names. Rigotti is one. I mean, that's a quantum computer play. We get some energy plays. Oxy, that comes out on Monday. None of these are market movers. We get Barrick Gold before the open on Monday. That would be interesting. They should be printing money right now. Tuesday, I mean, not much going on at all. Beyond Meat near bankruptcy. Something just fired off. Let's go to my alerts. Russell just broke to a lower low. Let's see. I want to see the pressure of selling. It's thin, very, very thin. No follow through. Let's just check back in quickly with the NQ. NQ pulling back a little bit. This apparently broke support. I didn't get an alert, though. It fired off. I didn't get an alert. All right, so we'll set up another alert down below here. Let's see if we get lower lows. Right now, we're not seeing a lot of volume. No panic, really. So it's all about nothing. We're looking at 5-minute charts. We're only into not even a half hour of the new trading day. Week, I should say, week. I just want to go back. I want to take a look at volatility. Volatility coming off of its lows. Let's set up an alert here on volatility. Ten-year yield continues to press up higher. Let's just check back in quickly with the dollar. The dollar holding firm. Gold. Gold up 0.20%. Okay, not a lot of action here. All right, earnings. Again, long story short, not a lot happening this week. You have Cisco, you have Walt Disney. That's about it. Quiet week. So the headlines are going to dominate this week. It's going to be all about the headlines: inflation, inflation, inflation. And my guess is that they're going to talk up the stimulus money, and they're going to ignore this. That's usually on CNBC. That's what they're going to do. All right. Just a pulse check here where we're at. A sentiment gauge I like to use is the put-call ratio. When you see a disproportionate amount of calls being bought relative to puts, that's a concern. And really right now, we're just off of extremes. And this chart really does a nice job of sharing where we're at historically or where we've been. As I just said, we're just off of recent highs in calls versus puts. And this usually doesn't end well. It just means that there's a tremendous amount of speculation, buying short-term put call options. And what that does is it forces the market maker to go out and hedge their book, and that forces equities up. So there's a knock-on effect to these retail investors coming in and buying short-dated options. They look cheap. They make a lot of money when they work, but many times they don't work. They blow up their accounts, and all of a sudden that segment of the market gets wiped out with the first sell-off because margin calls go out. They don't have the capital. That last bit of fuel the markets had goes away. So now we need to see whether or not the markets could stand on their own, because this is starting to come back down to earth a bit, not much yet. Also, we had a response out of Sam Altman denying OpenAI needs a government bailout. He just wants massive government subsidies. You gotta be kidding me. They're already getting subsidies. Our electrical bills are going up because of these data processing centers taking in so much energy, and we're not getting a paycheck from them, yet our energy bills are going up. We are already subsidizing these companies. They just won't admit it. So this is a problem, this AI narrative. If we go from very, very bullish, all is right with the world, a new utopia is upon us, to, hey, we have problems here. They're looking for subsidies. They're looking for a bailout. Who's got exposure? Who's going to go belly up first? When that narrative changes, everything gets real fast. We saw this dot-com bubble, savings and loans crisis. We saw it with the banks and the home builders in 2007, 2008, 2009. It's all the same nonsense. It's all BS. Job announced, U.S. companies announced 153,000 job cuts in October, a 175% increase from a year ago. Think about it. That was the highest number of layoffs for any October in over 20 years, and the most for any single month in Q4 since 2008. We know what happened back then. That was this. That wasn't pretty. We were short. We made money. And when you take a look at unemployment, this is an inverted scale. So when you see the line in red, meaning unemployment declining, it's actually going up. It's inverted. Why they did it this way, I don't know. I guess to align with consumer confidence, which is tanking at lows not seen since the lows of COVID. So the structure in which that we are bidding up equities, which are near highs not seen since the 2000 dot-com bubble, along with credit concerns, along with the underlying jobs market and confidence, is something that is not wise to ignore. And when you add in the fact that you have SOFR, secured overnight financing rate for banks, plunged to its lowest level in more than 2 years. What happened 2 years ago? March 2023, regional bank blow up. So right now there's somebody out there, or some entities that are getting bailed out overnight. And we just don't know who they are. So whether this makes it to the surface, to the headlines, I don't know. Whether they get absorbed by a larger bank and they don't make it to the headlines, we don't know yet. But clearly there is a problem in the plumbing of the financial system. It's undeniable at this point. Remember, let me bring you back to the Barron's article. Fed flags hedge fund borrowing as a vulnerability in the financial system. That's mostly private equity. I think that's all I have to go over. Let's check out what we have in terms of chart requests. Hey, folks, if you're not currently a subscriber to TrendSpider, please take advantage of it now. I give it away free to our silver and gold level members. I believe in it so much. And our prices are going up once the new website is launched because they have to. So lock in your membership now because rising prices do not impact current members. So I give it away free. The prices do need to go up. And if you're not ready to join the Contrarian Trader, that's fine. I understand it. At least take advantage of my 35% discount and get 35% off of TrendSpider. Use the link below on YouTube, links above on Facebook and Twitter, parentheses, X. Okay. Let's see what requests we have for today. Why is this not working? Okay, we have Franklin, LNT. That's a new one. George, AMPY. K-Max. Oh, CarMax. Holy crap. What a train wreck there. IREN. Okay. Unless somebody comes up with any more of these, I'm probably going to log off a little bit early tonight because I am not doing well. My voice is really starting to go here. So let's go through these. And let's begin. LNT, Alliant Corporation, weekly chart, Steady Eddie, nice breakout back in July of 24, grinding it out higher. Good volume last week. They tried to take it down. They reversed it up. Good stuff. Let's go to the monthly view. Here's your upper band of resistance. These are the automated trend lines. Click of a button. I think that this is bullish. I think it's going to go up. I think you're in a strong uptrend channel. I think that it's going to work its way up higher here. The trend is clear. It's defined. It's up. And I like energy, not necessarily the petroleum extractors or the support companies, but more so the utilities. Let's go to the daily chart. You know, it's under short-term pressure. They broke it out on Friday. RSI hooking up, volume looking good. I think longer term it's going to go up. It's not going to go up quickly. It's a steady eddy. It wants to go up. So I like it. Bullish on LNT, AMPY, Amplify Energy. Everybody likes the energy stocks this week. This is a real pretty chart. This is a daily chart. Let's not begin there. Let's go high level. So here's the value of the automated trend lines, folks. Click of a button. Bam. Lots of overhead supply here. So I would be very small in my buying where you're looking to put on a position right now because it's going to have to slug it out with the sellers up here that are just waiting to get made whole. You had people that bought back here in 2024. They just want their money back at this point. So if you're going to buy it, be patient. I would be a buyer, especially if it closes above $6.50. And I would get really aggressive on a rally and a close above $7.28. Because after that, you know, there's not much in terms of overhead supply. I mean, this is pretty. This is a monthly chart. Look at the long-term wedge formation here. This is very, very tight. I like this setup let's just quickly take a look. But this is a long-term setup, not a short-term setup. Too bad, no yield. But I'll tell you, man, this thing breaks and close above, $7 a share. I would already want to be in it to a certain extent, but I would complete my buying on a close above $670. I would have completed my buying. Bullish. Yeah, I knew there was a 7-handle resistance level here. So yeah, you have a 7-handle resistance level. I'm going to amend that. That's 670, 720. I would complete my buying. KMX. All right, so for a stock like this, it's in a macro downtrend. You need to be very, very careful here. Look at the volume bars. These volume bars tell you everything you need to know about this stock. It is under institutional distribution. You have concerns in the credit market. You've had lenders in the used car market go belly up. So money's tight. I would be very, very careful here with building a position without understanding exactly where historical support is and understanding that you should only be buying this stock at that historical support and with volume declining. It could still be down volume, but it's got to be below average. It's got to be trending downward. You can't fight these guys. They will crush you. Don't catch a falling knife. I'm a contrarian, and I'm telling you, don't catch a falling knife until the odds change in your favor and the probabilities of a continuation sell-off are unsustainable. We have RSI on a weekly time frame at what? 18? Yawner. It can go lower. You show me a 10 handle on the RSI at historical support, you got my attention. Where do I think we're going? We use the monthly chart. We're probably coming down here, probably into the mid-teens on CarMax. And if we don't, I wouldn't touch it. It's on my watch list. I'll admit that, but the trend is clear, it's defined, it's down, and you have lots of selling still occurring. It should be on your watch list. Set your alerts up. Simply do this. Do this, create an alert, break, touch, bounce, daily candlestick, fine, KMX, buy point monthly. Set it for as long as it possibly can allow you to. 60 days works. Now, your alert is set. Now forget. The more you stare at it, the greater the probability that you're going to make an impulse buy and you're going to be wrong. Unless you're swing trading it for a scalp. But if you're looking at this as a macro trade, a turnaround play, you're way too early. And being too early is the same thing as being wrong. Daily chart, we closed up on Friday. We're probably going to bump up higher tomorrow. And then I think that we fail and move lower. You're welcome, Franklin. Let's go to some comments here. BA. If possible. Yeah. You got it, BA. Again, you're welcome, Franklin, and George, you're welcome as well. All right, Tesla. Let's go again to the weekly chart. A pretty bad price action last week. If Tesla does not gap up and close above 440 spot 31 tomorrow, I would avoid it. This is a very bearish candlestick. It is a bearish key reversal. It's also a bearish engulfing. This is telling you you have a tremendous amount of overhead supply above, and every time they rally into it, it gets faded. Now, you show me a close above 670 per share, I'm a buyer. I was long at this. I got stopped out with a small loss here. And sometimes when you get that, you get stopped out, you get stung, small loss, stop looking at the chart and saying, was I right? Was I wrong? Stop. It's horrible thinking. Ignore it, because the next day it rallied strong. And yeah, I knew it. It looked like a good candlestick. Did it sting a little bit? Yeah. However, I avoided it. I didn't continue to watch it. I just said, you know what? Get it off your list. Don't watch it right now. And sure enough, on Friday, we broke lower. So don't let emotion impact your trading. So Tesla, weekly chart, no bueno, looking bad, and we were down on volume. Daily chart, not great either. Would I short it? No. No way in the heck. No way. Now you close below, show me a close below the lows of October the 28th at 413 spot 90. Then we may be talking about the short side. Not until then. Right now, it's consolidating. You don't short a consolidation unless you got information. IRER. Hopefully I wrote that down right. Sometimes I can't read my own handwriting. IRER. Is that right? No, IRE. Yeah, I can't read my own handwriting. IREN. Okay. Weekly chart. Avoid. This is classic topping action. You have longs in here trying to keep the dream alive. Every time they try to bid this thing back up, 4 consecutive weeks. What are the big boys? Actually, 5 consecutive weeks. What are the big boys doing? They're selling. They're fading the rally. Avoid. It's classic. Avoid. No bueno. And if we break this support level here at 57.44, you're going to have shorts move in. You watch for support down at 45 bucks a share. I would avoid this. Do not touch. Personally, I wouldn't short it. They could quite possibly try to bid this tomorrow. Watch for a fade. They've been doing it. This was a beautiful set of days. Tuesday and Wednesday of last week, no follow through. Volume was also decent. So I would defer to the weekly charts here, and they are screaming, avoid, profit taking. Tim, you're very welcome, my friend. PH. Parker Hannafin. I haven't looked at this chart in a long time. Let's go monthly view. Wow. Beautiful. Beautiful. God damn. Last time I looked at this, it was down here. Beautiful consolidation. Beautiful breakout. Let's go to the weekly chart. See how overbought we are. We're kind of overbought here. Doesn't mean we can't move up higher. If I were long, I would not sell it. But man, if you can get a retracement down to 797 on a shakeout, that would be great. If that doesn't happen, watch for a close above 845, and I'd be a buyer. Would I buy here? If I was going to do it, I would stay really small, because I need to expect resistance above at this resistance level. Again, automated trend lines, not my handiwork. That's the algorithm. And I would wait for a close above that mark. If you get that, then you could accumulate more, because the stock is saying, okay, I've earned my right to have your investment dollar, right? It's overcoming obstacles. The bulls are in charge. They're telling you by the price action here that this is a very, very strong stock, and there is money behind it as measured by volume. Daily view. Good stuff. I think we're going up here. PH, Parker Hannafin, bullish. All right, guys, I'm going to cut it short tonight. I am losing my voice. Everybody have a profitable trading week. To all our veterans out there, God bless you. Thanks for all you do. And everybody have a profitable trading week. I'll talk to you soon. Be well.